Well, welcome back. Stocks are up this morning on this, the final trading day of July, and what a month it has been. Futures indicating a gain of 88 points on the Dow Industrials this morning. The S&P is up 30 points right now, and the Nasdaq is up 150. Part of this rally has to do with Apple and Amazon, both up this morning, showing strong sales growth in the second quarter. Even though Amazon lost money, the stock is flying this morning. It is up 12%. Apple right now is up 2.33%. Weaker than expected on profit, but nonetheless, very strong performance here. Joining me right now is Kyriba senior strategist Wolfgang Koester. Wolfgang, it's great to see you. We are awaiting earnings from Chevron and Exxon. We'll get those numbers any moment now. What are your expectations for the rest of earnings season, and how would you assess what we've seen so far in terms of second quarter earnings?
Yeah, I think that, in general, as you talked about in the prior session, recession is what CEOs and CFOs are worried about, and therefore they're looking how to actually manage, A, product and sales, and B, the financials. And what we're really watching, as you know, all the time is how the dollar impacts, or the currencies in general, impact revenues and earnings. And if you look at a company like Facebook, who doesn't do it as well as some others, they were actually down 3% instead of up 1% if they wouldn't have had currencies impacting. So a 4% swing is pretty massive for a company like that. Amazon, on the other hand, does a very good job in managing their currency risk. Therefore, you see what the stock is doing. People have the confidence. And if you look at Apple earnings, not just myself, but all the analysts are talking about, there's two things we watch. We watch iPhone 14 sales, and we watch what the strong dollar is going to do to Apple. They're pretty good at managing it, too. So we watch the currency specifically, and there are lots of companies, including, for example, another one, Google, to stay in the tech market, who do it extremely well, and there are others who don't do it as well.
Yeah, but you're still talking about a slowdown. You're still talking about a number of companies, from Walmart to the major banks, saying that the second half is going to get tougher. So how do you square this major rally that we've seen in stocks for the month of July? Nasdaq is up 10%, and yesterday we got the first reading on the second quarter GDP. It was another contraction. Indicating we're in recession right now. Tech companies are pulling back, stopping the hiring, and yet the stock market is on fire.
Yeah, I think that one of the things that people continue to be worried about is, are we getting actually inflation under control? And if we don't get inflation under control, then where are you going to put your money? You're going to put it somewhere where revenues are actually going to be adjusted due to inflation periods. So you have increase. We are all feeling that pain at home when we all of a sudden have 10% higher food costs, and we have much higher gas costs. Well, they're actually going to translate that into actually higher revenues. So one of the best hedges actually ends up being the stock market, which seems a little odd because you are contracting. You're absolutely correct. We've had two quarters of GDP decrease, but people are cautiously optimistic and trying to figure out how to get through this. And you do have this political issue, as mentioned earlier, where interest rates, are we going to keep hiking them because we're going to keep printing money on the other side for maybe only a $750 billion instead of $1 trillion check we're going to write? These are things where politics and economics are actually crashing. Not very good in general for the economy, but where else are they going to put their money right now if interest rates may come back off, as the Fed chair alluded to earlier?
Well, one place that you've made money in this market is Chevron and Exxon. The oil sector has been doing well. We're just getting the Chevron earnings right now. The company is beating expectations on both the earnings and the revenue line at $582 a share versus an estimate of $510. Revenue at $68.7 billion, up from the estimate of $59.2 billion. Wolfgang, what do you think about Chevron, about Exxon, and the oil space overall right here, where this has been the leadership group on the upside year to date, and Chevron shares up another 3% right now. Would you buy this stock here?
I'd be very cautious, and I'm really hoping that oil prices are going to start coming off, and obviously they're making money in this area when we have such an aggressive increase in oil, and hopefully they're coming down, which I think will be good for the world, quite frankly, not just Americans.
All right, let me get your expectations on what we're looking at today. We've got the core PCE out, personal income and spending out at 8:30 a.m. Eastern. We had a GDP number, obviously, which was negative. What do you think about inflation cutting into economic growth and what we might see this morning from the PCE? This personal consumption expenditure is really the favored inflation indicator for the Federal Reserve, and we're looking at a gain of almost 5% year over year. That's the estimate this morning.
Yeah, I think that, you know, as they have to keep watching how do we get inflation under control. I wish I would have seen last time around, and you know they do up to eight adjustments of the Fed funds a year. I wish that last time they would have been actually a little bit more aggressive. This time they needed to do the 0.75%. They need to get this inflation under control. And whether, you know, people are going to start watching how they spend their money. They're still going to spend their money, but where they're going to spend their money and where can they spend the money wouldn't be in the luxury market right now, would be much more looking of what do I need to do? I need to spend more money on rent. I need to spend more money on gas. I need to spend more money on food. And so, you know, personal income, they're going to spend more money. The good news for the economy for this time around is that you did have, because of the pandemic and because all the money is in there, you have the savings of people typically much higher than you had before. And I think that is a good thing for the economy.
Wolfgang, it's good to see you. Thanks very much for weighing in on all of that. Wolfgang Koester joining us this morning.